Hello, welcome back to Core Finance. I'm Matt Brown. I'm joined by Rahul Khanna, FX strategist at Tradermade, and we're going to look at let's look at an indice versus the dollar index and the S&P. A lot going on here, but we can see smart bow tie in time for a Christmas ball. What's going on?
All right, so as you can see, dollar index back. If you see, the two indexes stark contrast to each other. We've seen dollar index sort of falling over consistently over the past year, while we see S&P 500 just running away higher and higher. And I think what's happened recently also ties in with what's happening on the U.S. tax reform front, and we'll probably discuss that in a second. But as we've seen, we've talked about before, there was a head and shoulders on dollar index. It didn't, it did complete, but it did not rally after that, and we saw this rejection recently. But still above that 90 to 50 area, which was sort of the shoulders of that move. And now we've seen dollar index in the middle of this uncertain situation, and it looks like could be choppy. On the U.S. tax front, if you look, there's been a lot of developments on the positive side. Market wasn't expecting any U.S. tax reforms, or any breakthrough on that before spring next year. But now we've seen, it could happen as soon as
tomorrow. Potentially.
Tomorrow, or potentially by before Senate goes off for the Christmas break. So those things could happen. What is interesting here is dollar is not reacting to that news. What is reacting is the S&P 500. We see S&P 500 sharply moving higher, and it is not that the tax reforms. There's no positive news on the tax reform. It is like dollar is looking past it. It's like dollar doesn't want to rally on this positive news, which is the interesting bit. So I think now we start to believe that even though equity might be positively reacting to the U.S. tax reforms coming in, but I think dollar index might struggle to rally significantly higher, as we've seen in the recent past. So that is the crux of it.
So which one's wrong? Is it the S&P or the dollar index? Because when you look at, let's say, the FTSE, and you look at the pound, and the pound rises, the FTSE goes down, the FTSE goes up, vice versa. Why is that not the case with the S&P and the dollar?
So S&P 500 is, it's like it shows the positive risk sentiment. If equity goes up, if risk is on. But also we've seen that given dollar was so down over the recent days, dollar has improved as the expectation of yields have improved. And we'll see how that will dollar index will tie in with the yields as in the next chart. But just talking about this, we've seen normally having a positive correlation between dollar index and S&P 500, which is not the case with something like Nikkei, which has inverse relationship because of risk on risk of a mode. But in S&P 500 we've seen in the past that there's a positive correlation. But in this case, the U.S. tax reform should be positive dollar, because it should help the economy, and hence dollar should rally. But it is not as simple as that, because what it means is that if U.S. tax reform were to come in, this will be positive risk, which means it could be actually dollar negative against the risk on currencies. Dollar might rally against the likes of yen and even slightly against euro, but it'll struggle against Aussie and Kiwi, if those things and there's also already a consensus that emerging markets won't be hit as bad as earlier thought. So I think that's also playing in this. But coming back to the I would tie in
with the yield, you mentioned that.
Yes. So coming back to the yields, we've seen, I've talked about this head and shoulders pattern forming on yields, and it looks like it's now completing, which means that even if U.S. tax reforms are going ahead, why are we having the situation where yields are sort of showing sign that might be topping, in the short run? So that's interesting bit. Looking at the calendar on the U.S. tax front, like you said, Thursday is the day where the Senate version of the tax would be put to a vote and could pass. It could happen as soon as that. And I think in that case, dollar will have a positive impact because it'll be so surprisingly soon. But I don't think that will sustain, and yields might even not form that if that were to happen on Thursday. But I think more likely option is that this will be pushed on to maybe later, where there will be a discussion between House and the Senate to come to a more mutual tax bill, and that could mean that this can will be thrown further down the road, maybe to 15 December. And I think that uncertainty would cause some drop in yields and possibly in dollar, at least for the time being. And if we don't get the 15th, we don't get what the market is now looking for, then we would think dollar will perform badly, and so would yields in the short run. But S&P 500, might be able to keep on to its gains, or so that is what it looks like. That even in this chart, it seems like we might have a correction. So dollar might correct as well, and then we'll see what happens after that. So in a way, it looks like U.S. tax reforms might not be such positive, story for dollar for the time being.
Okay, good stuff. Lots to digest there, but all very, very interesting. As ever, Rahul Khanna, FX strategist at Tradermade. Thank you very much for joining us.
Thank you for having me.